Okay, on this video, we'll be analyzing the Nifty IT index quickly. The Nifty IT index has been in a strong uptrend since March lows here that you can see it made around 10,900 levels, around 11,000. So since then, it's been a very strong uptrend to maybe around 18,500 levels at the top. You can see here, it has been trailing the 20-day moving average, which is the center of this Bollinger Band, and it has predominantly stayed above the 20-day moving average consistently since the March lows. Now here at the top, we are seeing a kind of a stalling pattern here, where since 31st of July until now, that is the 6th of September, so we've seen it's been more than a month where the price is not moved anywhere. So it's between 18,000, around 18,800 to 18,000. So that's about 4% range, which it has been trading for the last month or so, which is a very narrow range for the index in such a strong uptrend. And if I draw a trend line here quickly, just to show what's happening with the longer term trend, this would just to give an idea. It's still above the trend line drawn from the March lows, but if you draw another trend line here, which is a steeper move like this, you can see now it has been trading below this very strong trend line. This is just to show that there's some sort of a stagnation here at the top. There's some exhaustion. It could signal time correction, or it could also give a confirmation with price correction also going forward. Another important data point to look here is the MACD graph here. You can see here, though the price is not moved anywhere, you see the MACD is falling, and it has made a bearish crossover where this black line is below the red line. So that also indicates slowing in momentum. But then there's been no real change in the index level itself. The supports for this index is, at the moment, it is at the 20-day moving average, which is here at around 18,100 level. We briefly went up last week, and then we've again tagged the support line. So next week will be important for this index. If we start trading above the 20-day moving average, then we should continue with this range, that is between 18 to 19,000. The support for this index comes in here at around 17,200 levels, around 17,000 levels. This is the 50-day moving average at 17,200. 200-day moving average comes in at around 15,200. So it is trading significantly higher than the 200-day moving average. Another important thing to note is the IT index also tends to follow the US tech index, the NASDAQ index, though the kind of stocks in NASDAQ are different from the Nifty IT, but then we tend to move in sync with the NASDAQ. And in NASDAQ, we've seen significant corrections in Apple, Amazon, Tesla last week. So if the NASDAQ fails, then we should see the Indian IT index to start correcting from here. And though nothing on the technicals confirm a downtrend. Quickly looking at the weekly, see on a weekly, this break of trend is more predominant and more easily visible. We draw most of these, connecting all of these support lines here. Okay, that's not very useful. If I draw a trend here, connecting all of these supports. This is just to give you an idea. You can see it has been moving up along this line, but then now we've started to trade below this, below the support line, uh, which would now act as resistance if we go back here, and then we should start getting rejected here at this level at least once. Trading above this line again would confirm an uptrend, but you see again exhaustion, and then we've started to, and you see the kind of candles here at the top. We have multiple dojis and spinning tops, 5 weeks in a row. That's 1, 2, 3, 4, 5. That's not a very bullish indicator uh, for the index. If you can look at, this index here, which is so the index which is moved up exponentially like this, and then it is exhausted, and then we have these multiple dojis and spinning top patterns, which is 4 weeks, 5 weeks in a row, which could signal a potential down, a downward move. The 20-week moving average for the IT index is around 15,700. So that could be a significant correction from these levels. That's about 2,500 points on the index. Component wise, TCS has been very, very strong. And Infosys has begun to correct last week. So if TCS starts breaking down, we should see the IT index fall, start to correct to in line with the broader indices. Yeah, that is it for the IT index.